What is going on, everyone? Hope y'all are doing well. In this video, we are going to talk about a company called Opendoor and how this company could affect the way we buy and sell real estate. I know there are probably many opinions about the real estate market, so I will share my thoughts on that as well and share whether or not I'm buying Opendoor, even though the stock price has gotten absolutely obliterated. And all that I ask is that you obliterate that like button. That helps this channel a lot. And with all that said, let's go ahead and dive right in. So when we consider what are the challenges of moving, many people sell and buy a home at the same time. This puts families in a lot of stress because they need to focus on both transactions, and the timing has to be perfect because you need the money to buy the house, but you can't do that unless you sell the initial property. And that is where this Fortune 500 company comes in. Opendoor is a digital platform for residential real estate. So they are essentially the middleman when it comes to buying and selling real estate. The company allows you to find a home, sell your current home, and make it all happen at the same time through one platform. You can schedule tours at your own time and be able to move at your own terms. Given the world we currently live in, where there are a lot more work from home jobs, I wouldn't be surprised to see people move more often. And Opendoor could be a major player in this space. Now, it is important to note that Opendoor does not flip homes. The service Opendoor provides is the certainty of an all-cash offer on the home and being able to move on the customer's timeline. So how do they make money if they're not flipping? Well, they are involved in selling and buying, which means Opendoor will get many of the extra costs that come from buying a home. One of the main ones is title and escrow. Having been in real estate for years now, the title business is easily one of the most profitable parts of Opendoor. There's little effort involved. They make a service fee from each transaction when people sell to Opendoor because of how easy it is to sell homes through the platform. This service fee is at about 5% the total value of that home. Now with Opendoor Complete, consumers can now buy and sell in one transaction, which if any of you have bought or sold houses, you know that these transactions are not easy. So Opendoor Complete gets you an instant offer so you know how much you can put down on your next home. You will also be able to buy your next home with the buyer knowing that you are using Opendoor. Rocket Mortgage has also done a similar strategy because when sellers can see that the bank who is providing the funds is credible, they will have more confidence in selecting that buyer. Lastly, Opendoor allows you to keep track of the status of both deals so that you are able to select the closing dates that are most beneficial for you. Opendoor also added Lower.com as a strategic partner for their financing, which once again gives sellers confidence that they will get their money. And with the launch of a digital financing app, Opendoor is continuing to create simple and easy ways for buyers to obtain a loan. Down the road, they will be looking into other businesses involved with real estate like home warranties and insurance, upgrades and remodeling, and moving services as well. Given the company's innovation, I would not doubt to see some of these segments be on the Opendoor platform in the next few years. Now, the company has gotten a bad rap because of their competitor Zillow, who absolutely flopped on this business. And so the question becomes, if Zillow did poorly, then what makes Opendoor any different? And how would they be able to do well when real estate prices start to fall? This is a good question. Opendoor does have much more experience in this sector than Zillow. And one significant problem for Zillow is that they just bought every home possible anywhere in the United States. They simply went so quick that they did not see if the algorithm was working with where they were buying. Opendoor does the complete opposite, where they take their time in the markets that they're buying to make sure that their model works and then grows in those given markets. When we look at this past quarter's numbers, they currently have over 13,000 homes on their inventory and $2.3 billion in cash and cash equivalents. That totals up to over $8 billion in assets, and their current market cap right now is $3.5 billion. So right there, this looks like a pretty safe investment. They generated revenues over $5 billion and generated a profitable quarter. Looking at their Q2 guidance, they are expected to produce similar numbers as Q1 when it comes to their adjusted margins. Their revenue will be lower than Q1, which is to be expected. But when we look at year-over-year growth, it is still substantially higher. They are projected to also beat their first half expectations by over $1 billion. For a company that has a market cap of $3.5 billion and beats revenue expectations by $1 billion and has a profitable quarter with opportunity for more profitable quarters in the near future, this valuation makes absolutely no sense in my opinion. I mean, they have over 3/4 of their market cap in cash. So are you telling me that this business is worth less than $1 billion given what they have done over this past year? Another thing to note is that even though they will continue to increase operating expenses, this is still a hyper growth company. And I would rather them be close to profitability with amazing growth than be profitable with okay growth. When it comes to Opendoor, they are in a space that I believe is going to continue to grow over time. And when you consider the fact that the overall TAM for this company is over $2.6 trillion, there is no telling the kind of ceiling Opendoor has. If we look at what they did last year, they had revenues at about $8 billion and sold over 21,000 homes. So they almost have enough homes to sell 2 quarters worth. From a safe side, this stock isn't bad at all. But here are a few risks I think people should at least keep in the back of their minds and what I think Opendoor is doing to prevent these risks from affecting the company. First is that we go into a deep, major recession and people stop buying homes altogether. We actually saw this happen a couple of quarters in 2020. But with $2.3 billion in cash, that would be able to cover most of their expenses from these homes for a while. Now yes, they have burned cash as they burned about $660 million in this past year, but that would still leave about $1.6 billion for their homes. Second is that their algorithm struggles to calculate accurate housing prices, and like Zillow, they could be major money losers on the homes that they buy. And lastly, Opendoor could lack innovation, and this leaves room for bigger companies like Zillow and Redfin to take advantage of their technology to gain market share. When we look at their overall business, Opendoor continues to be conservative with their home valuations for their instant cash offers, especially considering the economic times we are in. And even still, there hasn't been a major effect in conversion. Here's why I believe they have still been able to execute as of late. One is an upgrade or downgrade in a home. Maybe kids are graduating high school and are moving out, or maybe there's a new child on the way. But this puts parents in a position to possibly move out of their current home. So especially when families have more children, they will have to upgrade their homes. They don't want the hassle of selling and buying a home at the same time, so they will be okay with the conservative offer. But the other scenario is when sellers are in distress and simply just need to get their home sold sooner rather than later. We see this a lot with those who sell cars and then buy new ones. They trade the old car and buy a new one in the same lot. The management team at Opendoor believes that during the most uncertain times, they can create the most value and stability because of their instant cash offers to buy homes from sellers and the trustworthiness that they will provide those funds. Now, I know there's a lot of people thinking that the real estate market is going to crash, but we need to consider the supply and demand of homes. The reality is that no matter what anyone says, we do not have the supply of homes that we need. That's just a fact. So even though interest rates are going up, because people will continue to buy houses, I believe that we will see a flattening in prices and maybe a slight correction, but not a crash like many people say. The price cuts that we're seeing on Zillow and throughout the media is because many sellers were putting listing prices higher than what they believe the house should be worth because of the continued increase in prices. And for several places in the US, if you're putting a nice house for sale at a decent price, they're still selling quickly. This is why we cannot relate our current situation with the housing crisis during the Great Recession. Housing supply from 2007 to 2009 was extremely high, and people were willing to take on a lot of debt. And this is a big reason why I believe that Opendoor will still be able to maintain margins with the current market conditions. Revenues may slow down a bit, but people will always need a place to live regardless if the interest rates are sky high. Other than the Great Recession, there were only 6 quarters of home prices that declined out of 188 since 1975, and these declines were around 1% or less. But even during the Great Recession, the largest price decline in a single quarter was 3%. So given current knowledge of historic trends, the likelihood of a sharp housing downturn is extremely unlikely in my opinion. Now these risks are worth it, especially when you consider the amount of cash on their balance sheet and their ability to have solid margins despite the number of homes that they sell. So with interest rates moving up, how are these expenses going to affect Opendoor's business? This, I believe, is one of the strongest things about Opendoor. Much of the extra expenses they can just pass on to the customers. Their main focus is on margin, and so they can pass along the full cost of the interest to the customers in order to get the margins that they want, which is around 4 to 6%. They do this by what is called the spread, which is their resale gains and fees. So as long as these numbers add up to the proper margins, then they can pass these expenses off. Even while Opendoor continues to expand into more markets, the cost is relatively small because everything is done digitally. So after sharing the fundamentals of this company, my thoughts on where they could be going over time, and the risks involved, do I think Opendoor is a buy? At these prices, absolutely. With the cash on hand, they're likely to survive a recession, and their business model has proven to be a successful one that I believe could generate solid profits in the near term. So I have already started a position in Opendoor, and I will continue to add to my position as long as they are under $10 a share. Now, analysts have this company growing 120% this year and then 27% next year, with a price target of just under $14, which is over 2x your money. Now, I honestly don't care too much about what analysts think, because I've seen way too many times that they were wrong with their estimates. But when you consider the kinds of growth that they are projecting, plus the fact that Opendoor produced a profitable quarter and they have plenty of cash on their balance sheet to get them through the likely recession in the near future, I think it's hard to not at least take a look at this company. But I hope you guys enjoyed this video, and if you did, hit that like button down below. That helps this channel immensely. Also, I would love to hear your thoughts on Opendoor, so feel free to mention them in the comments down below. And if you're new here, hit that subscribe button and notification bell, that way you're notified when new content comes out. Hope you all enjoy the rest of your week, and we'll see you in the next one.